Hello and welcome to Autology, the podcast that brings you the latest on automotive technology. Today's episode is called Risk Analysis of Building Gigafactories in Europe. And you're here with me, Amit Pandey. I'm your host for today's session. And our speakers for today are Ali Adem and Hugo Cruz, our experts on battery research at S&P Global Mobility. Hello, Ali and Hugo. Thank you very much for joining today's episode of Autology.
Thanks for having me.
Hi, and thanks for having me here.
It's great to have you guys. Today's episode is very interesting as we evaluate risks associated with building battery gigafactories in Europe. And this is especially in the context of China's continued dominance in this space. Now we know that battery manufacturing is at the core of attaining energy independence, and that also makes it a very critical piece of the puzzle as we are transitioning to electric vehicles globally. Setting up battery manufacturing units is not just extremely capital intensive, but it's a business with low margins. And with that backdrop, in the recent past, we have seen that not just one or two, but there are multiple examples of battery companies that have filed for insolvency in the EU and the UK region just over the last 2 to 3 years. Northvolt happens to be the biggest example. The company was once seen as EU's hope to compete with China's global dominance in the battery space. The numbers of Northvolt looked very strong. They had 15 billion in fundraise and a very large order book worth 50 billion, but somehow that just wasn't enough. And then we had British Volt, which had filed for bankruptcy in early 2023. They too had ran out of funds. Another example was German battery maker Custom Cells. They were a spin-off of Fraunhofer Society. They filed for insolvency in April after their customer, the aerospace company Lilium, went bust. And to name one more example, we also saw Norwegian battery maker Freyr Battery. Until last year, they were cutting costs. They were in downsizing mode. They had abandoned their expansion plans and had paused cell manufacturing operations at their gigafactory, which was called Giga Arctic in Mo i Rana in Norway. Now, earlier this year, they moved their corporate headquarters from Norway to Austin in Texas, US, and changed their identity from being called Freya Battery to T1 Energy. We know that China has a significant upper hand when it comes to competing on manufacturing batteries and battery electric vehicles in general. We also know that Europe is relatively late in venturing into this space, and to be able to become self reliant in batteries is a path that is not going to be easy for the region. So let me go to Ali. Ali, given your expertise on this matter, can you please elaborate in detail what are the key challenges for EU to become self-reliant in battery manufacturing? And why is it that we have so many examples of battery companies struggling to survive in Europe and the UK?
Yes, sure, Amit. I would suggest starting from the current state of the battery market. We should know that making a battery is highly complex. It involves very precise processes. There are high quality standards that result in significant amount of scrap material, usually. This has led to a market dominated by few key players, with top 7 companies holding up to 70% of the total market share. And as margins are already very low and amid the price war, we can expect further consolidation in the market. We can expect the less efficient players to be pushed out or to be absorbed by larger players. In some industries, we can see maybe some smaller players can carve out a niche by offering cutting edge technology or targeting specific markets. But when it comes to the battery industry, it's a whole different story. Because the R&D costs are so high, it's usually the big companies that can afford to innovate, to perfect new chemistries, develop processes that can push down the cost, for example, or improve the charging rate. So with this background, European battery manufacturers face numerous challenges. Most European players, such as British Volt or Northvolt, started without a technical legacy, and essentially they had to build their expertise from ground up. They might have underestimated the complexity of the battery manufacturing. For example, the startups in general struggle to optimize their process and reach to an acceptable level of scrap rate. Established battery manufacturers usually achieve single-digit scrap rate, sometimes as low as 5%, whereas the startups show scrap rates over 30 or 40%, especially in the first year. At such high scrap rate levels, the business can never be profitable. Another significant setback for the European battery players have been the slowdown in the battery electric vehicle adoption. So a lot of projects in Europe were defined on a basis of a more optimistic view and projection about EV adoption. However, from last year, we hit with a slowdown in the sales of EVs, and the market have been stalled ever since. And as a result, the region is left with an oversupply situation for the batteries. And one of the main reasons for this slowdown is often quoted to be the affordability of the EVs. And as we know, the battery is the most expensive component inside an EV. So the battery cost plays a really big role. And the challenge for the Europeans is that they set the strategies largely centered around nickel-based chemistry, or NCM. So for those of you who are not familiar with the terminology, so the NCM battery offers better energy density, meaning higher mileage, but it also comes at a cost. So the cost is usually 20 or 30% more than the iron-based chemistry, or LFP. So as a result of the slowdown, the OEMs are now looking for cheaper offerings and trying to move away from like earlier generation of the cars based on NCM strategy. So as we know, the Chinese suppliers heavily dominate the LFP domain. So over the past 3 decades, they have perfected the processes, they have created a lot of patents, acquired the know-how, and they have created a huge leap and gap compared to other players, including the Europeans. Therefore, competing with Chinese suppliers, both in terms of the technology and the price, has become very challenging, not only for the battery startups in Europe, but also established players that we find in Korea or Japan.
Thanks, Ali. These are very interesting points. Can you please elaborate on the battery cell prices for batteries made in, let's say, the EU region, and compare them with the ones made in China? And what kind of cost pressures the EU battery companies must face as compared to their Chinese counterparts? Hugo, you want to take that?
Sure. For this question, I need to refer to our proprietary battery price model. This model, we built it using a bottom-up approach that factors historical and projected values across materials, manufacturing processes, and financial costs. And important to mention is that we are constantly improving this model to reflect regional differences and process advancements. Now, jumping to your question, let me compare two popular cathode chemistries, NCM 811 and LFP. This to show you the difference between regions. For European battery cells in 2025, we are estimating NCM 811 cells to cost around $87 per kilowatt hour, while LFP cells cost about $79 per kilowatt hour. When we look at Chinese production for that same year, the numbers tells a different story. NCM 811 at roughly $71 per kilowatt hour and LFP at just $59 per kilowatt hour. To put that in perspective, European prices are running 23% higher for NCM 811 and even more substantial 34% higher for LFP chemistry. This wider gap in iron phosphate-based chemistries really highlights the technological advantage that Chinese manufacturers have developed for these specific cathode materials. This situation gets even more challenging when we consider Chinese LFMP cells, which offer a higher energy density and are currently only produced by Chinese companies. Now, let's look ahead to 2030. We expect the prices across like all battery producers to decrease, but the competitive gap will persist between regions, staying around 20% for NCM and 30% for LFP. This comparing the prices between Europe and China. Now, which are the cost pressures that we have identified for European producers? Allow me to list some of them. First, they are heavily reliant on overseas sourcing for critical components. cathode and anode materials, but also other components such as electrolytes, separators, binders, etc. They also face higher manufacturing costs for energy and labor. Additionally, European factories without experience and trustable partners tend to experience slower learning curves, which leads to high double-digit scrap rates, as mentioned by my colleague Ali, during the startup phase. And these scrap rates linger for longer periods of time. To quantify this challenge, materials represent approximately 75% of the total battery cost structure. When scrap rates increase from 10 to 30%, this can translate to a 15% increase in overall material cost. This is roughly equivalent to the entire gross margin of most battery manufacturers today. And this scenario is precisely what many European startups have faced. There is also this challenge of an immature upstream battery ecosystem in Europe that affects not just domestic material sourcing, but also quick and affordable access to machinery, replacement parts, and specialized labor. Finally, we cannot overlook the substantial government support Chinese companies receive through funding, incentives, and subsidies, plus a more efficient bureaucratic system that enables faster project commissioning and factory construction.
Thanks, Hugo. So you're saying that the pricing gap or the gap in prices of battery cells manufactured in Europe versus China will continue to persist. Now, in this context, what trends do you foresee for battery cell production in Europe? Do you see that Europe will move more towards LFP chemistry, or they will stay inclined towards nickel-based as they are as of today? Is there any other relevant pattern you'd like to mention?
Yes, of course. I mean, we are usually talking about like the cases that have not been successful, but we're already witnessing a significant progress in battery cell domestication in Europe. About half of all the battery cells used in European cars are now made locally, primarily by suppliers of Korean origin, like LG and Samsung SDI. That said, Chinese imports still command a substantial market share, which becomes increasingly important as European automakers push to develop more affordable electric vehicles. Historically, it's important to mention that Europe has favored nickel-based chemistries because they offer higher energy density, better recyclability, and they have a developed know-how on these cathode materials. But looking ahead, we are seeing a clear shift, as mentioned by my colleague Ali. European OEMs are actively working towards increasing their LFP shares as one of the ways to make EVs more affordable. In the next 5 years, we expect to see LFP cells gaining significant traction, especially in entry and affordable vehicle segments, models like the Renault 4, Volkswagen ID.1, the Peugeot 208, and the Fiat 500. And it's important to mention that we forecast that many of these vehicles will feature LFP batteries manufactured right here in European factories. According to our forecast, by the end of the decade, 2030, our projections show European production of LFP battery cells exceeding 80 gigawatt hours annually. However, it is worth noting that over 85% to 95% of this capacity will come from factories with Chinese origins, primarily from CATL's new plants being constructed in Spain and Hungary. These chemistry shifts towards LFP are also driving broader vehicle manufacturing changes too. The first one that is worth mentioning is that we expect more prismatic cells in vehicles produced in Europe, increasing from 50% market share in 2024 to over 60% by the end of the decade. There is also a remarkable trend toward battery pack designs without modules. So cell module pack configurations are like losing some market share. Cell to pack and cell to body configurations are set to jump from just 11% in 2024 to 42% by the end of the decade. And this happens because this approach maximizes the space available for batteries, allowing manufacturers to achieve higher capacities at a vehicle level, even when using LFP chemistry. Finally, European OEMs are pursuing a much greater vertical integration in battery manufacturing. either through joint ventures or by partial or even total ownership of a battery cell production company. This ownership stake is projected to grow tenfold, just 3% in 2024 to 30% by the end of the decade, showing European automakers are determined to control more of the battery supply chain.
Those are very intriguing points made by you, Hugo. So it's very clear that cost pressures are driving the automakers in Europe to embrace LFP batteries. You also mentioned about a few models from Renault and Volkswagen, and that made me recall a couple of announcements that came from both these automakers a few months back, where they have teamed up with battery makers like LG Energy, CATL, and Volkswagen has its own battery unit called PowerCo. They're all working to create an LFP ecosystem in the EU region. But having said that, this is a work in progress. EU still, as of today, we can safely say that they lack a well-established LFP manufacturing ecosystem. So, if you can evaluate what are the key challenges that associate with Europe's efforts to establish an LFP supply chain there. Ali, you want to take that?
Yes, sure. As I mentioned earlier, the Chinese companies have established a significant lead over the past decades. This was largely to the high licensing fees associated with key LFP processes that restricted the development of the technology in other regions like Europe. Currently, the Chinese suppliers offer fourth generation of LFP cells that offers high energy density in addition to ultra fast charging capability. And more importantly, probably they can offer such products at remarkably low prices. European OEMs are urging the Chinese cell suppliers and even their tier 2 and 3 suppliers, such as the cathode active material producers, to localize the production in Europe, maybe to reduce the supply chain risk, like the transport, logistics, and so on. According to our price model, the LFP cells produced in Europe are unlikely to be as inexpensive as those made in China. Nonetheless, OEMs, European OEMs, and Chinese suppliers are trying to localize the LFP production in the region. We can see several large-scale LFP projects, like the Stellantis and CATL joint venture in Spain, or other CATL facilities that are either in operation or being constructed in Hungary and Germany. The non-Chinese suppliers, such as LG, face a lot of hurdles, however. Technically, there is a considerable gap between their offerings and the Chinese manufacturers. Despite the contract that we have and we have heard from between LG and Renault for some of the Renault's EV products, we observe that the initial focus for LG will likely be on the energy storage segment. Probably they want to gain the necessary expertise that is required for the automotive market, which is much more demanding and competitive. Non-Chinese players also lack an established LFP supply chain, the upstream supply chain, I mean. In China, in addition to abundant materials that are available in the spot market, cell suppliers have significant influence over the upstream supply chain. They often produce LFP cathode material in-house, like CATL through Brump, or co-develop new materials through their strong partnerships with cathode and anode suppliers. The situation is even more complex when we consider the European players. So beyond all the challenges that I mentioned about non-Chinese incumbent players like LG, European companies must first demonstrate their capabilities and achieve the profitability with their initial NCM chemistry product. The story and what we saw with Northvolt experience showed that taking on too many new initiatives. In the case of Northvolt, they wanted to produce not only the NCM batteries, but the sodium-ion battery, cathode active material, and recycling. Taking on all those initiatives at the same time can lead to catastrophes. Therefore, it is more realistic for the European startups to first optimize their NCM products before moving on to new chemistries.
These points are also very interesting and notable. This discussion is so important to better understand the context and the impact of the export restrictions that are recently imposed by China's Ministry of Commerce. Uh, as we know, the announcement came on July 15th, and this time they have included the preparation technologies used in the production of LFP and LMFP battery cells in their catalog. Can this impact the gigafactories preparing to produce LFP cells in the EU region? And let's also include the US here. Hugo, you want to go first?
Yes, this is a difficult question to answer as the specific procedures are still unknown. But let me clarify a few important points about this recent announcement regarding these export restrictions on battery cell production technologies. First, this policy doesn't represent an absolute ban. They are restrictions requiring Chinese government approval for technology exports, and this creates a regulatory hurdle rather than a complete prohibition. Secondly, the restrictions specifically target processing technologies, the machines, processes, patents, and know-how, and not the battery materials themselves. And this is a crucial distinction. Third, these measures are very targeted, focusing on 3 specific production technologies for iron phosphate cathode materials and 5 technologies related to lithium extraction and refining. And they don't broadly restrict cell manufacturing technology. And finally, these restrictions primarily affect state-of-the-art technology, specifically 4th generation LFP and emerging LFMP technology, exporting older, less advanced processing equipment, probably for 2nd generation LFP, should be still possible. So in summary, who is really affected? Well, mostly battery material producers located outside China, even those of Chinese origin. Emerging cathode manufacturers will face significant challenges in producing the latest generation LFP and LFMP material, as Chinese companies completely dominate these advanced technologies. Similarly, lithium refiners outside China will encounter obstacles in producing high quality, cost competitive lithium products. The bottom line is that in the short to medium term, it will be extremely difficult and perhaps impossible to source cutting edge iron-based cathode materials from unauthorized producers operating outside China. This creates a significant strategic challenge for gigafactories planning to produce LFP cells in Europe and the United States, as they may need to reconsider their supply chains and technology partnerships.
Well said. And following up on the previous question, do you think that a company like CATL, which is actively expanding its presence in Europe and also plans to produce LFP cells in Hungary, would worry about these new export restrictions?
We believe these export controls should not directly affect battery cell gigafactories, so we can reasonably expect CATL's European expansion plans, including their Hungary facility for LFP cell production, to proceed at schedule. The primary impact will fall on the developing battery upstream supply chain outside China, specifically iron phosphate-based cathode producers and lithium miners and refiners operating beyond Chinese borders. European battery gigafactories should still be able to manufacture cells with advanced iron phosphate materials, provided they import these cathode materials directly from China. Sourcing LFMP and Generation 4 LFP from non-Chinese cathode manufacturers will remain possible, but only if the factory or project receives explicit approval from the Chinese government through this issued license. The full implications for lithium refiners and cathode materials manufacturers outside China, even those of Chinese origin, remain ambiguous, as the specific details on how these export controls are going to be implemented are still in development. However, we anticipate the decisions for these export licenses will be made on a case-to-case basis, likely with the licenses evaluated based on the involved technology partners, who is giving it and who is receiving it, also the collaboration structures, if it's a trade or a technological cooperation, also on the trade conditions, and finally, and more importantly, on geopolitical considerations.
Well said, Hugo. And here comes the big one. Let's evaluate the policies that impact the battery manufacturers in Europe and the battery manufacturers in China. So, on the policy front, if the price difference between the LFP and NCM cells produced in EU and China is so substantial, as you just mentioned a few minutes back, and if the EU wants to reduce its dependency on the import of battery cells from mainland China, then it is logical to introduce some kind of import tariffs on them. Uh, but currently, as I understand, EU's import duty is negligible, which sort of speaks volumes about the policy approach. So, Ali, can you give us your perspective on EU's policy approach when it comes to supporting companies setting up battery gigafactories in the EU region?
So increasing tariff is a double-edged sword. On the one hand, it can level the playing field for European suppliers, but on the other hand, it comes at the cost of having higher battery and EV prices. So as you mentioned, the current import tariff for the battery is quite negligible. It's at merely 1.3%, which is not sufficient at all to bridge the gap between the prices between Europe and China. Nonetheless, the battery industry is localized in Europe to a good degree. Over 50% of the European cars are now equipped with European batteries. This localization has been done mostly on a voluntary basis and pushed by the OEMs to reduce their supply chain risk or to improve their ESG credentials. But under a severe price pressure, the priorities are shifting. Having the experience of the failure of some major European players such as British Volt and Northvolt, the Europeans now are advocating an increase in the tariffs. And especially with the rise of protectionism and tariff war around the globe, it's not hard to imagine that these voices in favor of higher tariff gain more momentum and win eventually. But the tariffs are not the only solution. There are some initiatives by some member states to push for the localization. For example, the eco bonus in France predicates the subsidy for the EV buyers on some factors that are in favor of the European made batteries. We have also the Innovation Fund by the EU that has pledged to pour 3 billion euros into the battery industry over the course of 3 years for some selected projects. However, as opposed to the situation that we have in the US within the advanced manufacturing tax credit, this incentive only targets the capex and not the operational costs. Therefore, maybe there will be some relaxation for some of the investment costs, but the issues regarding the price disparity with China will still remain. And I should also mention that the new carbon footprint battery regulation was believed to benefit the European batteries when it was being developed. But what we realized in our battery carbon footprint was that the Chinese batteries can be even greener than the European ones. So according to the battery carbon footprint regulation in Europe, starting from this year, February this year, there is a mandate to declare your carbon footprint of the battery. And within a few years, I think from 2028, there will be some upper thresholds that all the batteries that are going to be sold in Europe should comply with. Chinese batteries can be in some cases greener than the European batteries. The reason for this is that, as we have spoken so far, LFP has a much bigger share in China, and LFP benefits from lacking cobalt and nickel that have really high level of emissions, especially during the material refining. Therefore, the Chinese batteries actually can be greener than the Europeans, and in effect, this regulation cannot curtail the import of the batteries from China to the region.
That's a very valid point, Ali. But does this mean EU has been focusing more on making sustainable battery cells instead of making them affordable? Uh, and how has this affected the strategy of emerging battery companies? And I say this after studying in depth what happened with Northvolt. So, your perspective on this.
Yeah, it's a good one. It is true that it's been a common practice among European cell makers to advertise their superior carbon footprint credentials. This was clearly one of their key selling points, and in a way implied that they were trying to convince their customers to pay a premium for accessing greener products. However, this strategy was flawed for a couple of reasons. First, as I mentioned, the Chinese cells can have lower emissions due to higher share of LFP. And at the same time, the Chinese suppliers have taken proactive measures to reduce the carbon footprint. For example, they build their gigafactories in industrial parks that have better access to renewable energy, and they are promoting greener technologies, the equipments they acquire, equipments that consume less energy, or they're simply buying green PPAs. During the past few years, also, we have seen a shift in the type of the electric vehicle offerings across the globe, moving from the premium segment to the volume segment. Therefore, the sentiment and the priorities have changed dramatically. Northvolt's strategy might have sounded very reasonable 5 years ago when the EV market was filled with uh, premium cars. But in 2025, we are dealing with a completely different paradigm. We are facing a slowdown in the EV uptake, and the cost has become the most paramount priority. This shift of strategy has hit the European players very hard. Some of them have already failed, and some others are trying to cope with the new world by adopting new chemistries such as LFP.
Very interesting. And I have a last question to both of you. Looking at Europe, what are the region's strengths when it comes to companies working towards establishing a battery manufacturing ecosystem there?
If you're okay, I will start, and then probably I will ask my colleague for some extra points. Well, from my side, I believe Europe possesses several distinct advantages for battery manufacturing from a downstream perspective. First, European OEMs have already developed substantial downstream battery capacities, including technology and processes for assembling battery modules and packs and integrating them into the vehicles. And despite recent slowdowns in battery electric vehicle adoption, our forecasts still indicate positive year-over-year demand growth from European OEMs for the foreseeable future. Mm, Important also to mention, I mean, Ali discussed it during his answer in the previous questions, but the European policy framework, while having room for improvement in terms of incentives and funding, provides clear directional support for establishing a complete battery manufacturing ecosystem. Perhaps something that it's worth noting here in this podcast is the rapid growing battery demand we are observing in Europe's medium and heavy commercial vehicle sector, MHCV, which it is expected to grow almost sixfold by the end of the decade. Our analysis shows that Europe is set to experience a high year-over-year growth in the electrification of vehicles with weights above 6 tons. And this growth is being fueled by ambitious policies aimed at decarbonizing transport. And this conclusion comes directly from our newly launched database that monitors the battery supply chain, specifically for the MHCV sector. And Ali, probably you want to elaborate further on the upstream perspective for this question.
Yes, sure. I should mention that establishing a holistic battery supply chain is a very lengthy process. We expect a rapid localization for the battery cell production for the reasons that Hugo mentioned. But if we consider the upstream levels of the supply chains, the challenges are much more immense. The local sourcing of the levels like the cathode active material or precursor or raw material in Europe are quite minimal levels. And European Union is actually pushing to incentivize the localization of these levels of the supply chain by legislations like the CRMA or Critical Raw Material Act, which specifies clear targets of the localized sourcing for different raw materials. But I have to mention that since these levels of the market are more commoditized, they are much more difficult to be localized. Especially they are more affected by the BEV slowdown, probably more heavily than the battery cell production. This is quite evident in the battery recycling market, for instance. We have observed and heard a lot of news around downsizing, cancellation, and bankruptcies in Europe and North America in this sector. So I refrain to finish with a negative message, but it seems that we need to be more patient to see the localization of the battery supply chain on the upstream side in Europe.
Oh, I'm so much in agreement with you there, Ali and Hugo, that we're very sure all it needs is some more time, and Europe will be able to develop its own reliable battery ecosystem. Well, this was a very interesting conversation. There's a lot happening in the global battery space as we speak, and there's so much to cover. But unfortunately, that's all the time that we have for today's episode. A big thank you to you, Ali and Hugo, for taking out time from your busy schedules today.
Thank you very much, Amit.
Thank you, Amit.
Always a pleasure talking to you both. And thank you to all you listeners for tuning in as well. We'd love to hear your thoughts on today's episode at our email, autology@spglobal.com. And you can find out much more at autotechinsight.spglobal.com. Please don't forget to hit the subscribe, follow, and like buttons to stay on track with the latest Autology podcasts. And we look forward to you joining us again in the next episode. Bye for now.